Hey guys, good afternoon, everybody. Today is Monday, June 20th. Happy Monday, everybody. Hopefully everyone had a great weekend. As you guys know, we didn't have a mentoring session, a live session today due to the holiday. So we are having our group mentoring session right now. Shortly, I'm just gonna go ahead and set up this room real quick, then we can get started with our session for today. But yeah, hopefully everyone had a great weekend. Happy Father's Day to everybody here who's a father in K2. I did send out a message in the group, so you guys probably saw that. But let's get started with this mentoring session. So let me get this link sent out to everybody here so that people can join, and then we can get started with our questions for this week. So just a couple more things here to add on. I didn't take any trades, so I don't really have anything for today, but it looks like a lot of you guys here did trade and you did lock in some solid profit even on a holiday like today. Just mark this up right here. Looks like we're good. Let me get this link sent out to you guys. Here in the premium. There we go. All right, I'll give it a few minutes for people to make their way in. And we did start the session a bit early. A couple of people did ask for it to be a bit early, but we'll probably be running till 2 anyway. So the people who do want to show up for the normal time will have the opportunity to join later at 2 o'clock. So I'll give it a few minutes for people to make their way in. See, looking over here at the sentiment is currently 69% long. Fundamentals are currently bullish. There's no overall bias today or right now in general. So, I mean, price can really go either way. If you guys are following the market this morning, you guys can see kind of the markup here. There wasn't really too much going on. It was a bullish push, but the market was technically closed. So I think tomorrow it'll swing, its way right back down. So we'll see where that goes. Hey, Kenny, how's it going? Hopefully you had a good Father's Day and a great weekend. Just a reminder, if you guys aren't familiar, today is a US holiday. I don't think this was a holiday last year because I don't remember ever taking a day off during June off the charts. So it is Juneteenth. I guess it's considered a federal holiday now, which is fine. We'll be picking back up in full swing tomorrow. Nice. Good to hear, Kenny. Yeah, and Kenny did mention earlier, so just FYI, Kenny did mention, he messaged me earlier and mentioned that he was asking if the market was closed. The market was technically closed. It wasn't closed fully. So you can see here the market was still moving up until about 10 o'clock. So the market was moving. It just was like bouncing up. It was bouncing around and then it just froze up around like 10 o'clock. I know you kind of hit me up around 9 o'clock right here, Kenny. The market was kind of just, it would, when the days are partially closed, then it kind of moves a little bit and then just freezes up or like randomly until it fully closes. So it does kind of move around a bit. But overall, the market was technically closed. So I wouldn't have traded. The market was open right here, like probably the first 2 hours, and it froze up a little bit, slowed down, and then it completely closed here at 10. It's going to reopen in about 2 hours or so. So if you guys do want to trade Asia session, you guys can, but I would probably sit it out until the market smoothens out. So, all right. It's still kind of early, so if you guys have any questions, feel free to put your questions in the chat, and then we will get started with the session once we have our first set of questions roll in. Peter said he got a couple nice moves during London. Nice, nice. Yeah. I actually took like a couple trades during Asia session. I did make pretty all right profit. I just took a couple liquidity pushes. And then I think one of the variations, which I made a decent profit, but nothing too crazy. I think what I'm going to do here is I'm going to mark up the areas of liquidity first, so that we can be prepared once the market does reopen. So I'm going to go ahead and mark this up. There, I'm going to go from the daily. I have to go from the higher time frames because there's not really much liquidity on the other time frames due to the market movement. So I'm going to mark that up right there off the daily 8 hour, which is right here. If there's anything else here, 4 hour. So right there. 2 hour, which is right here. 1 hour, which is, oops, I'll delete that. Got that marked up. That's good. Here's the 15-minute. -10-minute. There's actually a lot of liquidity that's sitting all throughout the charts. It's just a matter of time until these get hit, which they're going to get hit eventually, probably by tomorrow when the market does fully open. So this is why it's cool that you mark, if you do mark up the areas of liquidity, because you'll have a heads up as to like where price is going and where it's likely to push through, which it's going to happen eventually. I think it's going to happen maybe mid-Asia session, London session at latest. So I got the liquidity marked up right there. That'll be good. So when the market does reopen, we'll be ready to take some trades here. So overall, I do think price is going to come down. As you guys can see, there's a lot of liquidity right here. So when price does hit this point, I'm expecting it to push down a bit. One thing to be careful for is going to be the sessions right here. This is the London high. So one of two things will happen when price breaks through this liquidity. It'll either bounce off it or it'll come back below further and test this area right here. Once it tests this area, it'll do the same thing. It can either bounce off it or continue dropping. My guess is that by London, it will drop a lot further. And then again, right here, when it hits the next level of session. So there's going to be a lot of opportunity here to take trades. You know, unless you guys are like really confident about your trade, or if you have a really good entry, then take it. If not, I would just sit out till tomorrow. I probably won't be trading tonight. I'll probably just wait until market officially opens tomorrow, because I don't want to get caught in all this manipulation. There's just no point. You're kind of gambling at this point, because there's a lot of areas of where the sessions are located, but there's also a lot of areas of liquidity. So it'd be double-edged sword for you guys. Anyways, we got a couple questions here from Peter. So first question from Peter is the max amount of points you look for in between liquidity before you wouldn't take it. So typically I want it to be pretty close, Peter. So like basically anything 100 pips or less. The reason why you want it to be at least 100 pips is because you're trying to catch 100 pips, right? So if you have two areas of liquidity, like say for example right here, if you're going for 100 pips, this is probably not the best. Let me use an actual tool here, short tool. So this is actually a good area where I would take a liquidity push, right? Because you can literally catch it as it spikes down. So as it pushes down, it'll fill your trade. It'll hit your TP before it either bounces off or it breaks through. This is where it's tight enough. If it's more than 100 pips, like say, for example, if you're if the liquidity area is more than 100 pips, that's like a lot of, you're giving away a lot of movement there already, right? So like, for example, if you're looking for anything that's wider than this, like say 150 pips or 200 pips, this is a huge gap. So when it's a huge gap like that, you're basically giving away all the profit you could have made within here, right? So if it's like 100 pips, like say your gap was 100 pips, you can catch that extra 100 pips down here before it, it spikes any other direction. So for me personally, I typically want it to be below 100 pips, the distance between two areas of liquidity. It can go up to 150. I mean, it just depends on how far or how much liquidity is in the market. Like for example, right here, this right here, you can see how big it is, right? 100 pips is cool, but here's the thing: you have to make your judgment based on like how the market's moving. So for example, here, price is barely moving. If you're trading somewhere like, I mean, this isn't going to be that far. This is actually a good area of liquidity. Okay, so let me just map like this down here. So this is too wide. Obviously, clear example of being too wide, 360 pips, way too wide. You're giving away too much space. At that point, it'll probably reverse before it hits your TP. This right here is too wide too. You can see how it's about 170 pips, 150 pips. I'm trying to find an example where it's kind of okay, but then it's kind of pushing. It just depends on when you're trading. If you're trading during Asia session, then you probably don't want that big of a gap because you got to cover a bigger spread. Spread's typically like 140 pips or higher. So let me see if I can find one. This is a good one right here. This one's fine. So this is below 100 pips for sure, right there, 90 pips. This right here is too wide. It's 300 pips. This right here is perfect. So, well, it's not perfect, but you can see how like it's not super spread out, right? It's like a little over 100 pips, but you can still take it. That's what I was trying to get across to you, for example, because if it's like 150 pips, it's still kind of wide, but you can go a little over 100 if you want. But this is one that would be fine. The reason why I'd like one of these here is because if you take a trade, just like I mentioned earlier, and you enter off the top line, and I'm sure you've seen this before, whenever you take a liquidity push, you'll take a push like that. And what happens is as soon as price hits the top level, it spikes right through it. And then what happens from there? Retraces right back up, right? Gives you enough space to get in and out with no problem. So I guess there's no hard line number, but typically you don't want to be over 150 pips. Best case scenario, you want to be under 100 pips. That's probably going to be your best case. So that could be your guideline just to start off. So let's see. Follow-up question from Peter. Peter's asking, so we expected to push past the lowest liquidity for 100 pips and hit TP in most cases. Yeah, exactly. It spikes right through. You'll see it here a lot. Like for example, let me see if I could find an example here. How far is this one? It's too far. Oh, so this is a perfect example right here. I don't want to do it on here because I don't want to mess this up, but I'll go back to this clean chart and I will show you. It was around like 7 o'clock. Okay, so like right here, this is the prime example of what I was just trying to get across to you. So here is, let me measure this real quick. I forgot which one was it. I think it was this level right here. So for this level right here, as I was mentioning earlier, you want to have it about 100 pips, just like you mentioned, because you want it to basically spike through, hit your TP before it reverses. So right here, price comes down, spikes through, hit your TP. I mean, you could have entered right there. You could have entered right here. Either one, they would be perfectly fine at this level or this level, whichever one you decided to take, even for this one right here. So see how it spikes through and hit your TP? Look what happens after this. Full on reversal, right? So that's why you kind of want to have that space there. So in most case scenario, if you're like on point with the entry, you'll be able to get in and out, no problem. It even gives you a little bit of leeway right here to get out because it spikes right through it. This is why you can't get greedy when taking these types of trades, especially during, well, this is during a holiday, so I wouldn't even have taken this myself, but just using this as an example, that would have been where you wanted to, pull out of. So that was the example right there that I was just showing you. This one at about like 7 something. And it happens. The more and more that you apply this, the easier it'll be for you to spot, and the easier it'll be for you to just take the trade without even thinking. Like for me, for example, if I see price hit liquidity, I just hit the sell on my DOM. I don't think about it. The thing is, it's more about developing that intuition where you kind of just take it. But you have to actually know what you're doing. Don't just take a trade just because you feel it. Like have an actual strategy, and then if you feel it's going to hit, then yeah, take it. But don't just take it because you're like, okay, price is going to go up, price is going to go down. Because I see that happen with a lot of people where they think price is going up, where they think price is going down. They enter a random trade with no analysis, no strategy, no nothing, just because they feel price is going, it doesn't go their way. And they wonder why it didn't go their way because there was no strategy applied. For this here, if you apply the strategy and you trust it, just take it right away. And then just let it run. Or if you get scared, pull out early. Just really up to preference. So yeah, no problem, Peter. Glad I could help you with that question there. I think you had a second question. Okay, it actually was answered within that. You were asking how close is too close. So, oh yeah, so too close to sessions would be the same amount. So you basically want to have a little bit of a gap. So I basically want it to be at least maybe 50 pips or so. The reason for that's to cover spread, right? Typically you want spread to be covered a little bit. Spread's usually like 100 pips or so. So depending on where you cover spread, you want to be at least, I would say 50 to 100 pips. 100 pips to be a lot safer. Like for example, here I wouldn't take a trade at this point because this is Asia session and the spread is going to be wide. So you want to have enough leeway to get away. So probably something over 100 to 200 pips, so 10 or 20 points away from it. That's only because you'll see sometimes where price doesn't necessarily get to the session. Like for example, right here, price doesn't necessarily get right to the session, but it gets close enough, right? So you look at the price difference from the session to, and you can see it's not more than 100 pips, right? This is 100 pips. This is merely like 70 pips away. It gets really close to it before it swings right back up. So, and then again, right here, same with this price point right here. It doesn't touch the actual session, but it gets really close to it where you're like, I mean, you're like less than 200 pips away, maybe 300 pips, but it comes right back down. So typically you want it to be at least 100 pips because this will happen sometimes where you'll get a fake out. It doesn't come and test it, but it fakes out. It comes really close to it. Sometimes people will try to take like, and you guys have seen it before where I do it, where I take the last 100 pips until it gets to the session or to the opening price or et cetera. And I catch it usually. For something like this is, if you're trading the opposite direction or you're trading in that direction, you want to be careful and not get caught in this here. Obviously, it happens more often when price is being manipulated, especially on a day like this, news day. But if you're trading on a normal day, you'll see that it possibly like spikes to the news price and then it'll just, or sessions, and then it'll just bounce right off. But typically you want it to be at least 100 pips or more because you need to cover the spread, which is typically 110 pips during New York session. So hopefully that helps with that question there, Peter. It's just a lot of these questions are a bit subjective. There's no like clear number to apply because you need to think about what session are you trading on? How is volatility? Is price actually moving? Is price moving too fast? Is it moving too slow? There's different factors that come into it because if price is moving fast, you can probably catch a spike, right? Like say if it's moving like 100 to 300 to 500 pips a candle, you'll catch it spike past the sessions and then it'll come right back up. In that situation, you can take a little more risk because you have such a gap. Like for example, if price is moving like 500 pips per candle and you're going for 100 pips for this much, you can catch moves within there, right? Like easily. Price will spike down, hit your TP, price will spike up, hit your TP. You're perfectly fine. If price is moving like 20, points, which is 200 pips, and you're going for 100 pips, odds of you getting your trade hit with the spread and whatnot, it's likely to get you caught in that trade. Like, you'll get close to your TP, but then you don't cover spread, so then you're stuck in this trade. So a lot of this stuff depends on the session you plan on trading in. If you just stick to New York session, you should be fine. You have a lot of volatility during that period. But if you trade during Asia, that's where you have to be more careful, a bit more careful. That's why I don't really trade Asia too much, only if I see something that's really good, because volatility is too low, spread's too wide, and then a lot of times you can get stuck in that position. You'll just get screwed over. So just something to keep in mind, Peter. So that answers all of your questions there, Peter. Yeah, no problem. Glad I could help you with your questions there. The next question is from Denzel. Denzel's asking, London high, Asia high are where market closed. Not where they closed, but they're the highs and lows. That's why they're called the Asia high or London high. It's where they've touched the highest or the lowest during that session, not where they closed, but where they've touched highest or lowest. So let me see if I can find an example here. I'll go over here to this chart. I just don't want to mess up my markup chart, because that's, if we find entries later, that's probably where we'll be looking. So here's the Asia high and Asia low, right? So Asia session from yesterday, market opened at here, 1500 hours. So this is where market opened, and I can't even remember what that market closes. I think it's like 10, or I think it's 10. So that's like 2200 hours right here. So this is where market opens and closes for Asia right here, right? This is where it closes. This right here is the high, or you can see it there. This is the high, this purple line, and this is the low. So these lines don't demonstrate where the open and closes. This demonstrates where the high and lows are. That's why they're called the Asia low or Asia high. This is the Asia high here because that's the highest price is gone during that session, and then this is the low. So it's not where it closes, it's where it's touched within this session. And this is considered the Asia session, from market open Asia until market close Asia right there. Hey Fahad, how's it going? Glad to see you made it here. Happy Father's Day to you and everybody in K2. And hopefully you had a great weekend, but glad to see you here. Fahad, yeah, Denzel said, okay, we avoid trades close to those lines. Yes, that is correct. We avoid trades close to the sessions and news price and opening price. So the red flags over here, I'll just put them back up. First is sessions, which is going to be the purple line, red line, green line. Purple is Asia, red is London, and green is New York, because you guys can see where price rejects from, right? So like just looking at this, you can see it established right here, and then you can see where it tested it again here, like a couple, let's see how far. Market open right here. It tested it right there, and then it retested it again an hour and 52 minutes later. So literally an hour, 52 minutes later, it retested, and then it comes back down, right? And then right here, it tests this point, and I don't think price comes back to that point, but if you look over here into Asia session, you can see where price gets near it again. Or I mean, not Asia, London session. So Asia session closes here, it goes into London, and then you guys can see where price kind of gets manipulated, right? So if you look down here, this is like flat line where price goes sideways, but it kind of bounces in and out of that area. So let me just draw, I can kind of just spot it. I look, okay, so this area right here is where price gets manipulated, where the session is, right? Because you can see price pushes above, it comes back to retest the session, and it just fakes out, right? It pushes up, fakes out, comes back down, comes below here, fakes out, comes back up, fakes out, comes down, fakes out. And it just keeps bouncing back and forth. But this is like basically the middle where the sessions are. And you don't want to trade around this point, because the reason why you get manipulation here is because we're not the only people who are looking at these price points, right? This is structure that like bank algorithms, institutions, other traders look at. So if everybody's looking over here, people are basically betting whether price is going to go up from this point or it's going to go down from this point. And you don't want to bet, right? You're not taking a gamble here. Whenever you trade, you want to trade like you're the casino. You want to trade where you have an edge. Whenever you trade near these areas here, you don't have an edge at all because price will come near it and then it just bounces back and forth. Like you can probably get lucky if you take a sell or a buy, or you can get unlucky. Like for example here, say if you see price break above here, and I'll just rewind it to show you, because this is typically what people do. They'll use these price points as entry points, right? We do the opposite. We don't use them as entry points. We use them as areas to avoid. Because like, for example, here, people see price pushing up, and what happens? People get all excited and they're like, oh, price is now reversing. So they enter a buy here. And where do people put their stop loss? Right below that line, right? Like I see so many people do that. And look what happens. It fakes them out. They get caught in this trade here and they're like all excited, like, oh, I'm like in a good trade because they think they've identified where the breakout is happening. Price goes up a little bit, fakes out, comes back down, and then stops them out, right? Because their stop loss is right there. What happens at this point when they get stopped out? So typically when someone sees something like this, they're like, okay, I was on the wrong side. They get stopped out and they end up trading the opposite direction because they think, okay, price is now going to go down, right? Because they see this happen, they get stopped out. And I'm sure this has happened to a lot of you guys. You'll get stopped out and you start to lose confidence. You're like, oh, I just went in the wrong direction. So what happens is here, people enter the other direction. And it's just a never ending cycle. People start to enter a sell right here and they do the same thing and they put their stop loss right above it. It's like the same thing that happens over and over and over again. I'm sure this has happened to you, or you've seen people call signals, and this happens all the time. And they think they're unlucky, but realistically, you're trading where there's a lot of manipulation. That's why we just don't trade there at all. So people get stopped out here, and they're like, oh, "Okay, I was on the wrong side." They take the sell, they enter it, and then they get stopped out again. They're like, "Oh crap!" So they do that again, and then they get sucked into another trade in the other direction. So for me personally, I avoid this area completely because it's just clear manipulation. People just get suckered into these moves here. Because what happens is a lot of people, they try to do this where they call break and retest, right? They identify structure right here and they try to call break and retest. It does work sometimes, don't get me wrong, it does work, but a lot of the times it doesn't work. So for me, I've been trading for so long where I've been caught in this trap a lot of times where I just don't even bother with it anymore. So, that's the key thing. And that's the reason why we don't trade where these sessions are. Yes. So Denzel said, yeah, so true. So looking at bias is important and avoiding sessions. And yeah, those are the two main things, guys. So like how I try to remind you guys during the live sessions, there's like a couple main things to just focus on. Like if you can find out what the bias is, you know exactly what direction to trade. For today, there was no bias because the fundamentals here were bullish and the retail sentiment was bearish. So price could go either way. So you couldn't really take any trades here, applying the strategies properly. So like for one, you want to identify the bias. If you identify the bias, you can almost guarantee a win because if your stop loss is wide enough and you take a trade in the direction of bias, price is going to go in that direction eventually. It might not happen like right then and there right away, but if you just hold on to that trade, maybe a couple minutes, a couple hours later, it's going to hit your TP. That's kind of how Kevin over here kills it so much. You guys have seen Kevin's profits, right? And I don't recommend people trade like that unless you're like really confident about trading. But so let me see if I could pull Kevin's profits. The thing with Kevin here is that he doesn't use a stop loss. I'd never recommend anyone do that. He's got disposable money where he's okay with, going down and draw down more than 10,000. I can't do that. I don't have the trade psychology to be locked in drawdown negative 10,000 and kind of pray that it comes in my direction. But that's basically why he has a lot of wins here. Let me see if I could find any of this. Okay, so right here, you can see how all of his trades here are sells, right? Because the bias on that day was a sell. He'll take a sell with no stop loss and just wait for it to come down. It eventually comes down and hits your TP. So this is why it's important that you wait for a bias, because if you can do that, you're almost guaranteed to win. That's why he has so many wins here, because he has a wide stop loss or no stop loss at all. And he just lets the trade run in the direction of bias. Not that I recommend you guys do that, but if you ever get in a tight position and you're like kind of worried that you're going to hit your stop loss, you're going to lose trade, just make sure if you're in the direction of bias, price is probably going to come your way. So maybe be confident and wait for it to come back in your direction. So Other than that, the second thing is to avoid sessions. So as I mentioned over here, the main thing is, okay, so confirm overall bias. This is like number one, always don't only take trades in the direction of bias. And then the second thing is the red flags. Don't trade near sessions, don't trade near opening price, don't trade near news price, and you don't enter if the candle's too big, right? Because typically it's going to retrace back to some extent. Like, so for example, right here, let me just use this as an example because it's so easy to identify. Okay, so you can see here that this candle here is huge, right? It's too big. This candle here is like 190 pips, while the other candles here are all engulfed by that one big candle, right? This candle is way big. The reason why you don't want to take a trade when this candle is too big is because price typically retraces. It's going to retrace to either the halfway mark of the candle or the full body of the candle. So halfway or full body, one or the other. And you guys can see here that this next candle retraces back halfway, right? What happens after this? Price comes back and swings right back up. So that's why you want to enter right away. So going down the red flags over here, you definitely want to avoid these. For this last red flag, you can still enter a candle like that, but you want to wait for it to actually push, like swing back up. So like, for example, here, if I wanted to really take this trade and I thought this trade was a really good one, but I didn't want to enter right away, I would wait and then I would set my buy stop right over here. Not that there's a trade here, but if there was a trade, I would set a buy stop right there so that when it does fill, like it did right there, it comes up and hits my TP. So you don't get caught in this drawdown. It's just being smart, right? Because the thing is, this pattern comes up a lot. If you ever go back and just look at candles here, like look at this big red candle. Again, another big red candle, right? Where does price go? It's either going to go halfway or it's going to go to the full body. Let's see where it goes. Halfway. And then what happens if you enter later over here for a late entry? Right? It fills it and then it goes down to your TP. So it's just being smart, guys. I mean, I've been trading for so long that I see these patterns every day. If you trade something, you know, enough times, you'll see the same pattern just repeat itself. It's just really using, you know, your experience and knowledge to not get caught in these traps, because these traps happen. I've been trading for so long. These traps happen all the time. It doesn't always happen, but it's better to be safe than sorry, because, you know, if you want to get lucky, then yeah, you get lucky every so often. But if you want to be calm and composed and actually know what you're doing, you just have to understand that these traps are going to happen and these movements are common. It's not something random. It just happens. It's just how the market moves. But if you guys trade it long enough, you guys will start to pick this stuff up. Or if you just sit on the live sessions, I go over this every day. So if you sit in on the live sessions daily, I cover this stuff like literally live every single day. So you guys can see how I analyze things and see how they play out, which typically they do. So I think that's it for Denzel's questions there. If there's anything else you want to add to that, Denzel, just let me know. And then I can go over whatever you have more in detail. All right, perfect, Denzel. So let me scroll back up. We have a question from Kenny. Kenny's asking if I can go over the breakout. So I don't think there was a breakout today because there was no bias. But let me see if I could find it. So for the breakout here, market opened here at 6:30. The cutoff for this is 6:35. There. So let's just go back real quick and see if I could find the breakout over here. So basically, from my perspective, this kind of looks like the breakout, right? The breakout entry off this candle right here. So not that I would have taken this trade because the market was technically closed, but I'll go over the requirements here. and I don't think there was a bias, so I don't think I would take it either. I know this is an optional bias. I might just make this a required bias or a requirement because I never take the buy the breakout unless there's a bias there. You know, every trade I take, I only take any trade or whatever trade if there's a bias. If there's no bias, I just hold off on it. So looking at this right here, this is a little subjective because there is a wick on top. However, it is kind of a strong green candle. So it just depends on how you would identify it. I don't know if I would take this because it's not a very strong green candle, but it can still satisfy the requirements depending on how risky you're looking to take. Because it's not a very strong green candle. It's also not a very weak green candle. It's just like a green candle that's kind of strong. Not super strong, but kind of strong. That's the most subjective part, looking for a strong candle. Because in a lot of instances, you know, it just depends on whether it's a strong one or not. So looking at this right here, if you were to consider this the strong green candle, I don't think there's anything else after that that comes. I mean, technically, if you wanted to wait even longer, you could take it off this one over here. So if you let this run, this would, I mean, technically be the breakout, I guess. But you can see how there's no direction in the market, right? Like you would have been holding on to this breakout for like over an hour and it still wouldn't have hit. And that probably would have driven you pretty insane to be holding on to a breakout for that long. Again, if you wanted to enter right here, this would also be considered. This might be a better consideration of a breakout because this is actually a really strong candle. So let me go over here. Initially, I mentioned that it could have been this one down here possibly, right? But this seems like the one that would actually be it because this is actually a strong candle with like literally no wick. The only issue with this is that it happened right at the 635 candle. So, you know, only valid the first 5 minutes of open. Technically, the entry would have happened on the 6th minute. So I don't know if this is one that I probably wouldn't have taken this one, but let's see if it does eventually hit. It takes a long time. So you can see that this isn't a normal breakout. Normally breakouts would hit within the first couple of minutes, right? Like the first 2 or 3 minutes or so. This, you'd be holding on to this trade for, and this is why I was telling you guys not to trade during holidays because you have no volatility. Looking at this right here, you would have held on to this trade for an hour and 27 minutes. That's crazy for a breakout. The breakout's supposed to happen like right away. It's the whole point that it's called a breakout because you're looking for the breakout, but the breakout didn't actually happen until, you know, an hour into it. So Kenny, this is an example of, well, not an example. This is the breakout that would have happened today if we were to take it. However, it's not one that I personally would take because there was no bias. The fundamentals might have been green, but the retail sentiment was still a sell. So for me personally, I wouldn't have taken it. But yes, if you wanted to take the breakout, this would be the breakout if you ignore the second requirement here, which is optional. So that's it for that right there. If there's anything else you want me to cover regarding the breakout, Kenny, just let me know. I'll give it a few seconds here. I'm going to step away for 1 second, get some water, and I'll be right back. All right, guys, I'm back. I don't see any follow-up from Kenny, so I'm going to skip over that. There goes your example right there, Kenny, for the breakout today. Going down to the next question, let me scroll up real quick. So I'm done with Kenny's question. Done with Peter's above. Done with Peter and Denzel's. Okay, so question right here from Peter. Peter is asking, could you give a quick overview of how and why you mark news price, opening price, and what you look for in those areas, please? Yeah, so I mean, the news price they're all the same thing. Like news price, sessions, opening price, those are areas of manipulation, right? Because that's where people tend to take a lot of risk. So, was there news today? Let me check real quick. See if there was news today on the 20th. I don't think there was news at 9:45. I think that's it. There's no other news here for US, but let me see if I could find that over here. 9:45. So it's the same explanation that I used for the sessions. I mean, it's really no different. It's just where people take risks and gamble. So you see a lot of manipulated price movement, and then that's where it starts to create some imbalance in the market. So, I mean, basically when you're looking for that imbalance, you're looking for it to rebalance, right? That's why we, sometimes you see price come back to news price, or you see price go back to opening price, you know, hours later, or maybe even a few minutes later. So I'll mark up news price right there at 9:30. And then we have opening price right here at 6:30. Okay, so let me just give you guys an example here. Or, I mean, I don't even have to give a real example. It's kind of like, you can just look at how price moves. Let me just turn off a couple of things here. Let me turn off these sessions so that you can see it better. So the first part of your question, I'll turn off the low as well. The first part of your question is how and why you mark up news price. So the how for that question is, I go to the calendar here, whether it be Forex Factory or my FX book, either calendar will have the news events. Once you have those times there, you'll go ahead and mark it up on the chart. So like I mentioned earlier, we had news here at 9:45. I go to the 9:45 candle, which was, wait, did I get that wrong? 9:45. Okay, so I just got to adjust this slightly. So 9:45, which is right there. Small little adjustment. So basically right here at 9:45, that's where the news event happened. That's how you would mark it up, because the news started at 9:45 and the movement happened from that candle. So the place where you would mark it is where the candle opened. Sorry, I got to adjust that again. Move it up here. Okay, so whenever it's a red candle, you guys know that the top part of the body is where the candle opens, right? Vice versa, if you're looking at a green candle, the bottom part of that green candle is where the candle opens as well. So for example, here at 9:45, news event happened. This is where the candle opened. That's where you mark up news price. You mark it up before because you want to see how the market reacts to the news. You don't care what happens after if it's irrelevant. You want to know what happens before, because price happens right here, and then you see how market reacts to it. So market, that's where news opened, and then price went down, and then it faked out, came back up, faked out, came back down, but no real direction because the market closed 30 minutes after. So there was really no movement after the news there. Here's opening price right here. I'll just put a candle before, or a line before opening price, which was 6:30. So this is where the market opened. I mean, depending on where bias is, this is going to identify, you know, the direction of price. So like, as I was mentioning before, it's same with news price, opening price. I mean, whatever price, you're going to mark it up before market open. So market open here at 6:30. You can see it's a green candle. The opening price where the candle started would be on the bottom because price pushed up from there. So this would be opening price right here. As price pushes up, you can see how price comes back down, right? Because the bias here was a sell for retail sentiment, but the fundamentals were bullish. I don't know where exactly it was this morning because I wasn't looking. But you can see how price gets manipulated around this area, right? It's not a coincidence. Price comes up, comes back to retest opening price, bounces right off it, comes back down, bounces right off it. It's not like I drew a random line somewhere. This is actually news opening price. So you can see where manipulation happens here, because typically this becomes a key structure. Price pushes above. When price reaches this point, it does one of two things. It bounces off or it breaks through, right? It comes back again for the retest. What happens from that point? It bounces off. or it breaks through. Same with the news price over here. News price was opened, let me just mark it up, 9:45. You can see where price kind of pushed down, came back up for the fake out, came back and retested off it perfectly, right? So these aren't like random price points, they're actual structure. The thing is, and this is just from my experience because I've been trading for a while. This is where a lot of manipulation happens because a lot of people gamble off this, right? People look for the break and retest. People look for rejections. That's why you see the rejections off here. That's why I have two different scenarios. Price, because it just depends on like where people are betting, right? Because that's really what trading is. Trading is betting, but the way that we trade is we're gambling, betting with an edge. But here, people will gamble whether price will go one way or the other. They create structure at that point. It depends on how many people are betting on a buy or betting on a sell. More people here bet on a buy, so price bounces off. Again, right here, price comes down to that point. You have a 50% chance whether price is going to bounce off or it's going to break below. And that's why I draw it, and that's how I draw it. I draw it because that's where it market opens, and you look for how price reacts to it. And I draw it just based off the time. So that's basically a quick rundown as to like how this is used. And this is something that you can test yourself, right? That like you'll see that it's no coincidence. The only reason I started to identify this was because I started to see patterns. Before I would never mark this up, and then when I started marking up news price and opening price, I'm like, hey, this is like actual structure. Because right, people look for support and resistance. I think this is more important than support and resistance because price will typically not even respect support and resistance, but price typically respects opening price and news price. So that's something that you can go back and retest, Peter. If you ever want to go back, you can go back to a random day. Like literally, if you're like, okay, I'm bored today and I want to go to June 7th, whatever, random day, right? You go to June 7th over here. And then you just do the same thing. Like you go back to see this markup right here. That's opening price. And this is actually pretty fun. I mean, for you guys, it might not be fun, but for me, I find this to be really interesting because when you start to see these patterns, eventually you'll start to be able to like create your own ideas off this stuff. So like you can see how this was opening price right here on June 7th. Look how price will come back eventually at some point and retest that structure. I can almost guarantee it comes back at that point at some point in the future, where I just this is the 1 minute chart though, so it's like so far from it and it's moving kind of slow, but eventually that day was probably like a bad example. Let me see if there's another day over here. Actually, it's still on the 7th. Since it's on the 1 minute candle, it takes forever for it to get through. So this is the 1 minute, but I can see it coming back to retest at some point over here. So it's just a bullish push throughout that whole time. It goes further. I forgot what happened around this period, but it looks like the market kind of slowed down around the 7th. I don't know I think that was like during the time we didn't really have many trades. Yeah, the first week of June, we only took one trade. So this was just kind of like a dead week. June 7th, it was kind of slow. And I think the following week as well. One trade on June week 1, 2 trades or 3 trades on June week 2. So, I mean, this whole month has been kind of slow, which is typical. But using that as a kind of crappy example, let me see if I could find a better one here on the 8th. I mean, price eventually does drop, but it does take some time. Let me go over here real quick. It's getting closer to 8 o'clock or June 8th, following day. It's got to keep in mind that each hour has 60 candles, so it's going to take a while for it to get there. Okay, so maybe this is a better example over here. Let me go over here to 6:30. June 7th was just a day where price didn't really move much. Okay, so this is actually a better example. So this is opening price for 6:30. And you can see where price comes back, right? So that was the opening price. I think for this day on the 8th, I can't remember if we had a buy. I'd probably go to that date to see what our bias was. June 8th, bias was actually for a sell. That's why we took the sell there. And it took our full TP right there on the 8th. But this is what I'd be looking for because the bias was a sell. So see how price pushed above it? Since our bias for that day was a sell, I would expect it to come back down to retest the opening price. And let's see if it does it. Not that I remember what happened on this day, but I'm pretty sure it comes back down. And that's exactly what happens. So you can use this to your advantage if you have the bias. Like if you know the overall bias is itself when price pushes up like that, you can expect it to come right back down and retest it. And that's another tool that you guys can use when applying the strategies and whatnot. Because everything here kind of ties in, like everything that I apply, whether it be the red flags, whether it be the sessions, whether it be any of the indicators, any of the strategies, everything comes full circle. Like you can use one to improve the other. It's not like this is only used for this or this is only used for this. You guys can use all of the indicators together or use different strategies together or different theories together just to improve the probability of a trade hitting. Because obviously the more confidences you have, the better opportunity you have for it to hit your TP. So other than that, that's it for Peter's question. Let me scroll up real quick and see what else we have here. Okay, question from Fahad. Fahad's asking, I have a question. What is the best time to enter into a liquidity push? Let's say you have a liquidity area. Do you enter after the price goes past the first line or after it passes the second line? Always the first line, Fahad. So not that I would enter this trade right here because it's so close to the session, but if you were to use this as an example, you can see there's liquidity right there. I would enter on the first level right here. The reason why you want to enter on the first level is because if you enter down here, you're giving away profits already, right? Because you're only going for a quick push for like 100 pips or so. So if you enter right here, you're perfect. You can probably hit your TP before it bounces off the sessions, right? If you enter at any lower level, you're giving away profits because you already gave away this, which would probably cover your spread. This is probably your spread right here. You'd give that away. If you enter at this point, you know, you can probably still hit your TP, but you know, odds are you might get caught in the trade because your spread's too wide. So I always enter at the first level for my liquidity pushes if and when I do take it, but you got to keep in mind that you should only take it if you have a strong bias in that direction. So other than that, let's see. Yeah, no problem, Vod. If there's still a confusion there, just let me know and I can show you. But I think it's pretty self-explanatory, right? Like, so again, for example, right here, I don't think I would take this because I think it's too wide. Actually, this is fine right here. So if you were to take a liquidity push from this level right here, typically when it hits that first level, it usually spikes, right? You've seen it before. It hits that level, it spikes right through, and then it tests the next level right here. So if you were to do that, you'd hit your TP. If you enter down here, then you might get caught on the short end of the stick. Price might spike because it's kind of too late. It'll spike like down there, and then it'll just reverse. And then at that point, it's like you missed the entire move because you had the whole 100 pips within it. So hopefully that helps, but this is kind of more of an iffier example because it's a bigger liquidity area. Nice, nice. Yeah, so Fod's been practicing. That's good. Yeah, it's one of the like before I didn't really use it as its own strategy. I just use it as another confluence. Like say, for example, if I got a B3, then I would take the liquidity push because the odds are it's going to hit because it's going to have that liquidity to push right through it. But I mean, yeah, it just really depends on like how you want to apply it. I started applying it on its own, but I think now that the market's kind of slowing down a bit, I might just use it as an extra confluence because, you know, typically in the summer, you get a lot of back and forth movement. You don't want to get caught getting too greedy, taking riskier trades. So other than that, let me scroll up real quick. Next question is from, let's see, David said, I have seen happen when you have a green, red, and a green the next candle would be considered a green candle. I would wait for the 1 minute, a momentum signal, and a 1 minute candle breakout, the previous high for a buy. I mean red and then a green. So let me reread that again, David. I'm kind of confused with your statement there. So you do it on the 15-minute high-low. So I mean, we can probably look over here. So basically what David is saying is that he's seen where he'll have a green candle, a green red. Sorry, Dave. I'm like kind of confused with your thing there. So you said I have a green candle or a green red and a green on the next candle would be considered a green candle. You'd wait for the 1 minute, a momentum signal. So you're using the high lows off the 15, but you're entering off the 1 minute. So you're looking for a green, red, green candle. I think, well, I don't know if this is what you're talking about, but there's another strategy that I've learned a long time ago. I think it's called like the turtle strategy. Maybe if you could break it down a little better, Dave, because I can't really understand what you're trying to say here. Because you said you have a green candle, red candle, or if you have an example to show me like a timestamp, I can pull it up. I just don't know what you're talking about because you said you have a green candle, then a red candle, then a green candle next to it. I mean, this is obviously it's not a KT strategy, so I'm not sure what you're referring to. I don't know if you're talking about a candlestick pattern or if you're talking about, because I've seen a strategy like that before. It's called like, I think they call it like a turtle pattern or something like that, where you kind of have mixed colors, like it's consolidation, and then you wait for the breakout. I don't know if that's what you're referring to, but it kind of sounds like it might be the high-low scalp strategy. But if you've been using it and it's been working, then, great. Yeah, keep using it. I personally don't know which strategy you're referring to. If you have like requirements, that'd probably be best. Like you have to make like a step-by-step requirement. Like if this happens, like, because you're kind of saying, let's see, so you said, and you can do this yourself, like, identify green candle, then identify red candle. This is the best way to understand a strategy, because the thing is, like, if you don't have an actual set of rules, you really don't know what you're looking for. You're kind of just going off the fly and you're kind of changing things up to satisfy what you want to see, right? But if you have a set amount of rules, like for example, so you said green candle, green, identify green candle. And you said, wait 1 minute for a momentum signal. 5. Wait for 1 minute candle breakout, previous high. Yeah, so this is kind of the first step, I guess, you're using to identify. $15-minute high low. So this is where I get kind of confused because I'm not sure what you're looking for. Because you said look for a green candle, look for a red candle, look for a green candle, wait for a momentum signal. I mean, if you have an example here, that'd be great because we could pull it up. But I don't know exactly what you're looking for here. Let me go to the 15-minute real quick. I'll just mark up the high lows. We could probably find something here. I'm gonna go before the and guys, just FYI, this isn't a strategy that we're applying at all. This is something that David's been applying and it's been working for him. So I mean, whatever works, guys, you guys can apply it literally whatever you guys want to. You guys can use these K2 indicators for whatever helps with whatever you want to apply. But this isn't one that I created, so just don't get this confused with anything that we're applying because it's not one that I apply. I just want to go over kind of what David was referring to over here. So let me go back and move that down a little lower. And I'm going to go and replay this from this point right here before price broke past these areas. We'll go back to the 1 minute. Move this a little lower. And I'll just put this as David's test strategy. It's not one that I apply, so I can't really answer any questions regarding this. This is David's test strategy. So I'm just trying to see where price kind of broke past these areas. I don't think it's broken past any of them anytime recent, but let's see if I can move this forward a little bit. Okay, so maybe this might be an example here. David said 15-minute candle pattern is green, is red, green, next candle will be green, one candle previous break. Okay. Yeah, your strategy is kind of like really complicated, David. So David said for 15-minute candle. So are you applying the strategy on the 15-minute or on the 1 minute? Because that's a lot of work. I mean, well, if it works for you, great. But I feel like that's a lot of work because if you're looking on the 15 and you're also looking at the 1, there's a lot of room for a mistake, right? Like that's why for me, I always stick on either the 1 or the 5. I don't switch between multiple time frames. I'll use different time frames for the high lows, but not for actual entry. So Dave, do you have like do you enter these on the, because your requirements here are like really confusing. Your first question or your first part says 15-minute candle, the pattern. So if you're looking on the 15, but you're looking for a 1 minute momentum, I'm kind of like confused, like where you would look for it. Maybe I think you're kind of just putting the requirements out a little mixed up. So what I would recommend is to do something like this, David. Make a step-by-step process, and then we can review your strategy or whatever you're applying. The confusion is like, guys, if anyone could read in the Zoom chat if this makes sense to you, because I just don't get it. Because David's saying Sean. So guys, if anybody could just pull up the Zoom and just read David's text just to see if it makes sense to you guys, because maybe it just doesn't make sense to me, but it like completely doesn't make any sense to me. It says 15-minute candle pattern is green, is red, green, the next candle would be green. 1 minute candle would break the high of the previous high. Yeah, sorry, David. I have no idea what you're trying to explain. Because you're saying 15-minute, and then you're going from the 15-minute to the 1 minute. So I'm not sure if you're applying it on the 15, or you're applying it on the 1. I don't mind covering it. It's just if you could make it a little more detailed, that could help. Because I don't think. Okay. 15-minute for bias. I still don't get it. Okay, so what are you using for the bias? So you're on the 15 here, right? What are you using for the bias? Because if you're using the fundamentals and retail sentiment, like that's what I know for bias. You can't change this at 15 minutes, so there's going to be a bias either way for the daily. What are you using for the bias? Are you using momentum signal? Are you using pivots? Are you using trend meter? This is why you got to be a little more specific, because I have like no idea what you're using for the bias. You said use 15 for the bias, but I'm not sure. Okay, there, perfect. So that's something that you would have to add in the requirements, right? Because you can't just say 15-minute candle and then I'm supposed to know that you're using the momentum, right? So if you're using 15 momentum, then put that in your requirements, because now I know that you're using the 15-minute here for bias. So using this as an example, you have a 15-minute momentum, right? That's what you're using here. That's going to be your first step, I guess. So, and let me just put this down again over here. So David said no. Okay, I don't know. Here, this is what you should, David. Like, make a step-by-step process, and then we can go over it. Because I have like no idea what you're referring to. Because first you said you use a 15-minute for bias, and then now it's no. Here, I'll mute you. Yeah, I'll let you talk. There you go, David. You can talk. You're still muted on your end because so I click ask to unmute. Yeah, you're unmuted, David. You're just you muted yourself. So I'm clicking ask to unmute, but you're still muted on your end. So you might have to, there's a button on the Zoom on the top. It's like on the microphone. It says mute. If you click on it, it'll unmute you. But you're not muted right now. Yeah, you're still unmuted. You got to unmute yourself. Here, I'm clicking to unmute you, but your own computer is muted. Yeah, I mean, it looks like it's not working. David, so here, if you want me to go over this, just make a step-by-step requirement, like basically any of the K2 strategies here. So like you can see from any of the strategies here, this is why my strategies are easy to follow because we have a step-by-step process. For yours, it's kind of confusing because I'm not sure what to do for yours. Okay, said you're entering unmute. That was MT4 acting all crazy. I think because the market's reopening, it's 2 o'clock. So the market has just reopened for not US 30, but for certain other markets. Yeah, you're still unmuted, David. You got to unmute it on your own end. All right, looks like you've unmuted yourself. It showed that you just remuted yourself again. So let's see. Looks like you're good, David. You've unmuted yourself. Looks like your mic might not be working, or because it shows that you're not muted, but I don't hear anything coming from your mic. Let's go over Kenny's question real quick. Kenny's asking, is there news where FTMO don't want you to take trades? Not for US 30. So for US 30, you just can't trade over the weekends. If you traded today, like say, for example, if you traded earlier, Kenny, when I said market was closed, you would have lost your funded account or you would have blown your challenge because you technically would have traded over the weekend. So if you traded right here at 10 o'clock and you're just like, oh crap, I forgot to close my trade, market's been closed for about like 4 hours now. So if you had a trade open from that period, you would have failed your account. So you just can't trade over the weekends for US 30. For other pairs like Forex pairs, you'd have to trade or you'd have to see the calendar, which it tells you which restricted on the FTMO website, but you just can't trade over the weekends. That's yeah. Aside from what Sam said, you can trade news on FTMO swing account. So if you have a swing account, yes, you can do that. But if you're not, then you just can't trade over the weekend. David, so how's that coming along? I'm trying to see. You're still unmuted. I see your account keeps going. You turn off your mic, but then I don't hear anything, and then it goes back into mute. So if maybe for the next session, David, you could fix your mic so that you can kind of explain your strategy. But I think the best way for you to really explain it would be to give us a step-by-step requirement, like basically all of the other strategies that we apply here, because this is the only way you can really break it down where there would be no confusion. If you have a step-by-step process like this, confirm this, confirm that, and the other, that will allow us to identify your entry. But from your breakdown there on the Zoom, I just had no idea what you were trying to explain. You said you're using the 15-minute for bias, but I don't know what you're using for the bias. Plus, I don't know the steps after that. So yeah, Dave, if you want to make a step-by-step process, that'll work, and I can help you. I also help other members uh, develop their own strategies. I don't do that for everybody, but a lot of the times when people are developing strategies, you can run it by me because I've seen a lot of stuff trading related. So I can kind of tell you what needs to be changed to fix certain things. So these K2 indicators can be used for whatever strategy you guys want to apply. Like for David, he's applying his own strategy, but he's using the K2 indicators. That works. It's just really up to how you guys want to apply it. Basically, the K2 indicators and the K2 strategies are like training wheels for you. I'm teaching you guys a foundation to what to look for, how to apply it, what these indicators do. And then for you, you can use these indicators for whatever thing you want to apply. You don't have to use the K2 strategies. You can apply it however different or however similar you want. It's just finding ways to utilize them to work in your favor, which, I mean, you can use these indicators for like literally anything. So other than that, Kenny's asking, okay, so I haven't seen any follow-up from you, David. If there's any follow-up or if you're writing down the requirements, just let me know and we can go over your strategy at some point. But if not, I'm going to go over the next question here from Kenny. Kenny's asking question, can I write off these sessions off my taxes? So that's something you should ask your tax accountant. Kenny, I feel like a lot of people ask me tax questions, but I'm not a tax specialist, guys. I mean, I'm technically an attorney, but I'm not a tax specialist. So I can't, don't take this as tax advice, but you can write off anything that goes towards your business. So if you have a trading business, Kenny, where you have a company, for example, for me, I'll give you guys my example, right? So I trade with FTMO. FTMO pays you as like an independent contractor. So if you're an independent contractor for FTMO, you're basically like their consultant because you're trading their accounts. You're not trading real money, but you're trading their accounts. So you're basically acting as a consultant. So for me personally, you could, well, for me personally, yeah, if I was to pay for K2 is what's making me money, right? Because I'm using the K2 strategies and the K2 indicators to trade for FTMO. So if I'm paying for whatever I'm paying for to make me money, it's considered a business expense. So if you're paying for a K2 subscription and you're using the K2 indicators to trade an FTMO account to make money, yes, your K2 subscription is a tax write-off because it's used for a business purpose and business purpose solely. So short answer to your question, Kenny, yes, you could. But this is something that you have to talk to your tax accountant about. Your tax accountant probably wouldn't have no idea what you're talking about unless like they're familiar with trading and stuff. So you kind of have to break it down for them so that they understand. Like you have a trading business, you're trading for FTMO. In order for you to make money trading with FTMO, you need K2, right? So if you're using K2, it's a business expense because it's a direct correlation to like how you're making money. The only way your business makes money, AKA getting profits from FTMO, is that you need K2. So yeah, that's a short answer to your question. And it's not just K2, I mean, it's everything like TradingView, right? You have to pay for your TradingView subscription to chart your trades, to take trades. So your TradingView subscription is also a tax write-off. And a quick breakdown as to how that works. And this is like for here in the US, but it works similar to like other countries, I'm assuming. Basically, a tax write-off is at the end of the year. So here, let me just put an example here. And again, this is not tax advice. This is just me telling you what I do, for example. So like FTMO payout profits, right? Say you make 100K end of year net profit, right? This is how much you make for your payout. So in California, I mean, depending on what your tax bracket is looking like, you're probably gonna have to pay 20% of that in taxes, right? End of year tax liability around 20% or more. So if you have to pay taxes on this, and this is why I do FTMO, it's smarter to do FTMO because you can get tax write-off off this opposed to doing your personal account. So, and a lot of people don't understand that. That's why like people always complain about FTMO. I'm like, dude, because you guys don't understand like how the tax game works. It's better to get paid out through FTMO than through your personal profits because then you don't get tax capital gains. It's different from like trading profits. So say, for example, if you made 100K, so 100K times 20% equals, and you can use the calculator just to show you exactly. And again, not tax advice, just showing you guys how this works for me and how it could work for a lot of you guys if you guys are profitable with FTMO, and basically how to get your K2 stuff and TradingView and all that for free. Not for free, but it's a business write-off. So say you make 100K at the end of the year, and then you have to pay 20% in taxes, right? So you have to pay 20,000 in taxes. So you have a $20,000 tax liability, right? Say you're paying a yearly subscription of K2. So like, and then these are going to be your business expenses, right? So you have K2 subscription, and you're just going to say that's like 2K for a year, right? TradingView sub. You just say like 1K a year, right? Cell phone trade. Yeah, I don't know. How much is your cell phone bill? Like, I don't know. 4K a year, I don't know. We're just gonna use whatever stuff here. Okay, internet. Internet bill, because you need internet to trade, right? So like for that, what's that, like 4K a year? So okay, all in all total, expenses going to be around 2, 6, okay, so 8, 10, 11, so 11K. Okay, so your total business expense is like 11K, right? So instead of paying 20K in taxes at the end of the year, you'll deduct business expense of 11K. So you'll only pay 9K taxes. So does that make sense? That's how you'd use it, right? If you try to run this as a business, like as a business, you can't just write off your personal taxes. I mean, you probably could. Your tax advisor or your tax accountant probably knows a way to do it to your personal, because you can always run a sole proprietorship or something like that. But this is basically how it works. You know, maybe at some point, or maybe like in the next, we'll set up a session where I can like break this down so that you guys can kind of figure out how to I mean, basically get your K2 subscription for free, TradingView, because this is technically for free. Instead of you paying taxes, you're getting it for free. Same with like, you know, my car. Like I'm getting a new car this week, I think. And you guys have seen it. I might get a Taycan. I'm going to trade in the Tesla because I'm just tired of Tesla. I see too many on the road. So it's like, I want to get something different. So you guys can get a car too if you're using it for a business purpose, right? But it has to be used for a business purpose. Just keep that in mind. But yeah, I mean, that's pretty much how it would work. But yeah, again, I'm not a tax advisor, guys. So this is how I do things. I have tax specialists to help me with this stuff. I read a lot of books regarding taxes. You know, there's different ways of getting around. So there's just possibilities are endless once you start to run it as a business, because you can start writing off a bunch of business expenses and whatnot. Kenny said my trade company is an S corporation. Yeah, that's fine. It doesn't matter. It could be S corp, it could be an LLC, it could be a sole proprietorship, it could be C corp, whatever you really want it to be. That's what it would be. But yeah, mine's an LLC, but it's taxed as an S corp. So I have both benefits. The LLC protects you from legal liability. The S corp provides you tax benefits. So, I mean, there's a lot of different ways to do it. But yeah, it's a quick rundown of how you would or how you could write stuff off, including the K2 subscription, which you can basically get for free at that point. All right, so let's see. David said Telegram. Okay, so let me check David. All right, so David said, okay, let me write this down over here. You should have just put the text here, David. If you could just copy that text and put it down right here, that'd be better because I can barely, let me see, okay. Sorry, Dave, this is still confusing. This is exactly what you just put in the chat, but I still don't understand what you're saying. You got to put it like in a step-by-step, like how I have all the strategies right here. Like you basically just copy what you put in the chat and then you put it in the thing, but I still don't understand what you're trying to say here. So, okay, let me just try to read this again. By example, 1 15-minute red candle, green candle. So this doesn't make sense to me because you're saying 15-minute red candle. Okay, we were looking for red candle. Green candle, the third candle. So I don't understand this right here. You said red candle, green candle, the third candle would need to break the previous high. So maybe if you could break these up into 2 different steps, because I don't understand this part. You said 15-minute red candle, right? So we're looking for red candle. Green candle, the third. This, like, I don't understand what this means right here. You said red candle, green candle, the third. Does this mean we're looking for a green candle and then we're looking for a third green candle? Or, because you kind of skipped candles here. You just said red candle, then you said green candle, the third. Like, what happens in between the third candle and the first candle? Yeah, if you could kind of just break it down a little more, David. I mean, sorry, I'm not trying to be disrespectful. I really don't understand what you're trying to say here with your requirements. Because I could see this. You said 15-minute red candle. Okay, so let me just go over here and I'll try to look at like what you're trying to say here. So let me go over here real quick. All right, we got a 15-minute red candle, right? Your second thing says green candle, the third candle. Like, I don't know what that means. You said red candle. So here's a second candle. I don't know what I'm supposed to look for in the second candle, but you said third candle is green candle. So red candle, green candle, the third would break. Sorry, David, I'm still completely confused with your breakdown right here. I don't even understand what this is referring to. So you're looking for red candle and you need the third green candle to break the high. The high here is already broken. So what happens if the high isn't broken? If anyone here knows like what David's is trying to say, input would be highly appreciated, because I don't know if maybe I'm just not getting it. Maybe somebody else understands what this is, because I'm trying to figure it out, but I just don't understand any of this. 15-minute red candle, green candle, third candle would need a break. This bottom part here, I don't get either, because you said 1 minute entry. To enter the trade, wait for momentum signal, then a candle breaking the previous high. So I mean, this kind of looks like you're just repackaging the high-low scalp. Is that what you're doing? Because the high-low scalp here is you're just looking for the high-low is basically what you did there, but you're doing it on the 15-minute. We're looking for breaking close, and you're trading the direction of momentum, except you're using a momentum signal. Yeah, David, sorry, I just don't understand it. So try to do something like this, David. Have a step-by-step process and actually break it down, because there's like, I don't see any process here. You just said 15-minute red candle, so I have 15-minute red candle there. Green candle third. Like this is what really throws me off. You see green candle, the third candle would need to bring. So are you looking for a red candle then a green candle? Okay, so I think I could kind of red candle, then green candle. Then you're looking for okay. So David said green candle, then red candle. You're looking for a third candle to break the high, but but this wouldn't be considered a previous high right here. The high would be right here. You get what I'm saying? Because this isn't a high here. You're just breaking a candle, like the candle high, but this isn't the actual high. Because you said we need to break the previous high. The previous high is actually like way up here. This is just a candle high. It's not like a high or a low. It's just the high of that candle right there. So I think you need to change your requirements a little bit because you're not necessarily breaking a high or anything. I think this is the same example that you're referring to, right? This one right here. No, so 745. Let me see if that's. See if I could find it. It's probably not going to be on my chart over here. Okay, so I think this is the one that you're referring to. So if you look here, I mean, this wouldn't be considered the high because this was just, I mean, it was just established, right? But that was the candle that you just referred to. So you're talking about the high. The high is actually like up here. This is the same example that you're referring to, it looks like. So you've marked up the two lows right there. This is the next green candle that you referred to, but it doesn't break a high because it just creates a new high right there. The high is actually a bit higher. Right there, David. If that makes sense. Because you said red candle, green candle, third candle has to break the high, which it didn't because the high is right here. Sorry, David. Your strategy is like way too confusing. I don't think this is something you can really. I mean, yeah. So here we go back on the lower time frame. It still doesn't break the high. You said go candle by candle. We're going candle by candle here, and it still doesn't break the high that you're referring to. So I just don't get your strategy at all. What I'd recommend is just make a step-by-step process, David, and we can look at it maybe at the next live session. We're kind of cutting it late into this one. Unless we have like some progress with your strategy here, we can go over it more, but I'm like, I have no idea what to look for here. Because your markup here is on the 15-minute, right? Yeah, these are 15-minute candles, but you're saying to go on the lower time frame. David said you don't want to understand. I've been trying to understand for like the past hour, David. I don't know how else can I help you. I mean, I just spent like almost 30 minutes trying to help you with this and unmute you, but you're still saying I don't want to understand. I mean, if anyone else here could give at least some input to help David out, because I have like no idea what David's even talking about. Let me see. Anything here? Yeah, I'm trying to understand, David, but none of your requirements make any sense. That's just because you're saying to use the 15-minute, but then you're saying I'm not interested in the higher time frame, not that high. Go candle by candle. I'm going candle by candle, and it still doesn't break your requirement here. You're asking that you said the third candle has to break the high, which I'm here on the 1 minute. It still doesn't break the high. Even you know, this candle here, if you waited for this one on the 1 minute, your trade would have lost, right? Because you're looking for that candle to break above it. It just doesn't make any sense to me. So yeah, I don't. If you could make any sense of your strategy, I can help you go over it more. But I don't understand anything you're saying, bro. I'm trying my hardest to understand, but it's none of your requirements make sense. You're going from the 15 minute to the 1 minute. I went from the 15 minute here. I don't see anything because it doesn't break it. I go on the lower time frame, like you mentioned. It still doesn't break the high. I have no idea what you're trying to explain. So if you want to break it down, feel free and we can go over it. But I've tried my hardest to understand what you're trying to explain, but it just doesn't make any sense to me. Yeah, Henry's asking, can you please move to other questions? It's not fair to others. Yeah, so sorry, David. Other people here are complaining because we're spending too much time on your strategy here. But if you want to break it down and give the requirements, just send me the requirements or post the requirements up and we can look it up. But your breakdown here just doesn't make any sense to me. Anyways, we're going to move on, guys. So next question over here is from Henry. Henry's asking, I came late. Can you show some Forex examples in time frame? So, I mean, I could show you an example if you can tell me what you want to see, Henry, but I don't know exactly what you want to see either. Because your question is kind of broad. You're asking, I came late. Can you show some Forex examples? Like, which strategy do you want me to look over? Because there's like a lot of strategies here to cover. You got to be more detailed than that, Henry. I still don't know what you're referring to. Henry said KT strategy used a couple weeks ago. I still don't know what you're talking about, Henry. So if I pull up the course over here, let me see if I can show you. And this is why I don't know what you're talking about, because so let me just count the strategies here. So this is what the course looks like. All these strategies here work for Forex. So there is the SR zone strategy, that's one strategy. The official intraday strategy, that's two strategies. Momentum pullback, that's three strategies. Pivot scalp strategy, that's four strategies, five strategies. And there's a lot of other ones here that still apply. So if you could, let me see. So Henry said they were longer time frame. That would be the intraday strategy. So I mean, the example for that would be, let me see. So I'm currently actually in one of those trades right now. I entered it kind of late. I'm currently in profit 127 right now. This is my live account for my Forex. I just take the trades and I let them run. So I'm currently in profit right now, 126. It's a smaller account. This is like a $10,000 account. I'm only risking about 3% per trade. So each trade, I'm probably making about 300 to 500 bucks. I'm just pretty much setting and forgetting it. You can see here, I didn't really touch it. I just left it alone and I'm just letting it run to its TP right there. So let me see if I could find an example of that. You're basically referring to the intraday strategy. I don't think there were any entries that came up anytime soon or anytime recently. I'll use this example right here. Henry, I mean, the strategy is pretty simple. You're just matching the trend meter with the momentum over here as well. And let's see. So let me just use this. Let me turn off a couple of these things here. So for this strategy here, this is the very first strategy that I taught you guys, or I mean, whoever's been part of K2 for a while, this is like the very first strategy that we applied. Basically, the only other step that was added to it was that you want to confirm what the overall bias is. So looking at the overall bias over here for whatever, yeah, it's not on here anymore. Let me see if I can go back to it. Okay. So basically, if you're applying these strategies, you want to make sure that it's at least 70% in one direction or the other. So GU is an example right here. Let me see if I can pull up GU. GU is currently up 73%, so I'll be looking for some sells for GU. Let's see if I can find it here. I have a couple other markups there. Okay, so here's an example of GU. So it's been for a sell for quite some time now. For GU, basically, this would be an entry right here. I'll just use this for an example. because it's been in a sell bias for a while now. So basically for this strategy here, this is the K2 intraday strategy revised. First, you want to confirm overall retail sentiment bias. +70 in one direction, trade opposite. Second, you want to confirm a valid K2 momentum signal. Reconfirm trend meter matches. Setting set to same as chart. And I'll make another video for this at some point, probably soon. It's just still testing. I mean, it's basically the same strategy. The only difference is that we have a bias now. So looking at GU over here, first requirement, you want to confirm overall retail sentiment bias 70% in one direction. You'll trade the opposite. Looking at this over here, GU is currently 73% long. So you definitely want to do the opposite and sell. So we're looking for sells at this point. You want to confirm a valid K2 momentum signal. There's a valid momentum signal here. It's valid because it's a red signal with a red sell signal attached to it. So yeah, you're right, John. John, you're 100% right. Sorry, I screwed this up. I only thought it was Forex. I read Henry's message. So this could be applied on whatever time frame you really want to. It's just on the higher time frame. So yes, you can apply it on the 1 hour or 4 hour. I mean, it just depends. But yeah, you're right, John. Thanks for confirming that. You can do 1 hour or 4 hour. I trade on the 1 hour. That's why my EJ position is currently on the 1 hour. Basically, this is a 4 hour. I'll show you an example on the 4 hour, but it works the same on the other time frames. So looking at this right here, you want to confirm the overall bias. Again, 70%. It's 70% long, so you're looking for a sell here. We're looking for a sell. We have a valid K2 momentum signal for a sell. It's valid because we have a red candle within a red signal. Vice versa, if you had a green candle within a green signal, that would be a valid buy. So right here, we have a valid sell signal. Next, you just want to confirm that the trend meter matches. Right here, the trend meter is red. With that said, you enter a short position. Enter on open of the following candle. And then fifth, you want to set stop loss at previous high low. TP equal distance for 1-to-1 risk reward. So right here, you set the stop loss at, let's round it off to 65 pips. Once you have that set up, you just let it run. It's a set and forget strategy. And there you go, full TP. So that's an example of applying this on the 4 hour, going down to the 1 hour, which is where I apply it. Same thing. So you'll go back over here, same thing. Confirm the overall bias, sell, valid sell signal right there, match the trend meter. Have your TP stop loss set right there at about 55 pips. Let that run, full TP. Again, there's another example over here. Same exact thing. So, I mean, this takes out all the guesswork. I mean, literally, you don't have to really think too much. If you can match colors, you can do pretty well with this. I mean, but you have to follow the steps. Here's the thing. I give you guys steps here, and I don't know, for some reason, people always skip the first step. I don't understand why. It's like literally smack dab in the middle right there, or in the front, and people just ignore the first step. Like for the variations, I'll see people show me, like Kurt. You guys have probably seen Kurt in the group. Kurt always like shows me B3s that he loses, and then he always skips the first step. I just don't understand. It's the first step, and every time we talk about it, I try to confirm, like, hey, did you confirm the bias? And like, I'm kind of playing dumb because I want to see how he responds, because I know what the bias was because I was trading US 30. So he'll say, yeah, I confirmed it. I'm like, oh, really? Because I checked and there was no bias. And he's like, oh yeah, actually I skipped that first step. So for what, I don't know, for some reason people always skip the first step. So you guys can see the strategy here is very, very simple, but you have to follow the steps. If you don't follow the steps, don't expect to have good results, because the steps are there for a reason. So with this 1 hour right here, it's the same thing. You have to confirm the overall bias. If you don't confirm the overall bias, then you have uh, less possibility of it hitting. So like, for example, here you confirm the overall bias for a sell, you confirm a valid K2 momentum signal, trend meter's red as well. You enter on the open of the following candle, set stop loss at the previous high low, equal distance for the TP, you let it run. And there you go, full TP. So super simple, guys. You guys just have to follow the directions. I feel like a lot of people just get impatient and they don't want to follow the steps, which is really simple, but you just have to make sure that you confirm, like it's a checklist. You just check everything off, like 1, okay, that fits. 2, okay, that fits. 3, that fits. 4, enter on the open of the falling candle, then you're good. But yeah, I mean, it's not really that difficult once you actually get it down. Sam said, I'm in the most recent sell on GU. On demo, it's not looking good at the moment. Oh, quick. So here's another thing, guys. You have to pay attention to the news, right? So the red flags here still apply, but the main thing, if you're trading on the higher time frames, is the news right here. One of the reasons why I wouldn't enter a new trade today is because we're on a holiday. The volatility is not very high. So let me check the trade that you're in right now. Sam, so you took this here. I don't see any sells here, Sam. Which one did you take? Because I probably would have taken it myself too if I saw it. So Sam said I'm in the most recent GU trade. I don't know if you're talking about, this was from last week, this one over here, but I don't know if the bias was for a sell last week. This was on the 14th. That's the only one that I can see. There's one right here, but we don't have a buy bias, so I wouldn't have taken this one. Is there a different one that you saw here, Sam, for GU? Unless you're on a higher time frame, on the 4 hour. Okay, let's see. You're talking about this one right here, right? So, I rewinded it, Sam. It's not red right here. If it was red, it would change to red. If it was, because this is like when this candle closes, this would have been red right there. Do you have the proper? You might have the settings wrong on yours. Let me see. You might have the default settings. See if it updates. No, even on the default setting, it's blue. So I have it here set the same as chart. I'm moving forward a couple candles. It still stays blue the whole time. Are you using different data? I use forex.com for forex pairs. You might be using different data, but I rewinded to that candle there, and it hasn't been. Yeah, Sam said, "Damn, must have messed up." I mean, it happens. But yeah, I don't think it was red at all. Also, I wouldn't have taken this because it was right on news at 6 o'clock. So that's another reason. Yeah, that's weird. Well, I mean, maybe you were saying things that happens to me sometimes. Sometimes I'll see a trade and I'll like literally like I'll convince myself that it's red. I mean, maybe you just really wanted to enter a trade and then you entered it and you thought it was going to be red, but yeah, I rewinded it a couple times here. So it was actually green. So before that right there, it was green right here. Sam, this is before your entry, right? And then the next candle, it actually turned blue because it doesn't usually go from green to red after one candle. It usually goes, you can see here, it changes a bit, right? It goes from red to blue and then green, and then back to blue and then back to green. It doesn't necessarily go from like red to green right away because it takes a while for the trend to shift. So it's okay. Good thing that it was on your demo and not on your actual live account. But Yeah, it kind of looks like you might have just jumped the gun, or you might have entered it before it actually closed. That might have been it too. You probably were just waiting for it and you're like, oh, this is going to close, and you took it, and then it ended up changing in between that period. And that happens to me too. I do that sometimes. I'll wait till like the last like 10 minutes and I'm like, okay, this is going to close, and I end up taking it, but it ends up flopping. Yeah, I mean, other than that, that's pretty much it for right now. Let me see if there's any other questions here. Sorry, Dave, that we couldn't really cover yours. I mean, I was trying to, I was really trying to help like go over yours, but I couldn't understand your strategy. Let me scroll up real quick. All right, Kenny, we'll see you tomorrow. Henry, so Henry, back to you. Is there any other questions that you want regarding the sorry, and sorry it took so long to get to your question, we got caught up. But if there's any other examples you want me to show you, or if you're still confused about any of the steps here, just let me know, Henry, and then we can go over it. But I think for the most part, it's pretty self-explanatory. I think the main thing that you would be looking for would be for the sentiment over here. There's not that many assets that go over at 70%. So like when you find one, you can just keep drilling it. My Euro JPY trade, I should probably close out of it actually. It's not even, there's no bias right now. So let me go back to that. Where's that? When I entered it, there was a bias. There's no bias now. So I'm just going to close out of it. I'm going to lock in 130 bucks right here. No biggie. With profit. So I made 130 off this trade here. It was actually a late entry off of this one right here. So I closed out of my position. This is my live account on forex.com, locked in about 130. No biggie, it's just quick profit. But typically I would let them run. It's just right now. And thanks for bringing this up, Henry, because I wouldn't even have looked at EJ. Typically I just set and forget it. This was actually higher. And now it shifted. So this was actually like 70% on Sunday, I think, or not Sunday, on Friday. And I just let it run over the weekend. So yeah, thanks, Henry, for saving my trade. There's other ones here though, like gold. Gold's like one you can probably trade. It's 82% bullish. So if you go to gold, I can't trade this on my forex.com because the leverage is too high. So you typically would be looking for a sell, which there's no sells available right now. But if it does come up, that'd be one. Henry said, any word on a K2 live event in Vegas? So not yet, Henry. We're leaning towards a more advanced training, like live event. Basically, Kevin kind of reached out to me and I talked to Peter about this as well. I don't know if Peter's still here. But yeah, Kevin, you guys have seen Kevin's profits where he's locked in like, the crazy wins and whatnot. Basically, he wants me to set like a live event where like a lot of the more advanced traders could come in so you can see how much profit he's making here. He wants to learn from me in person, basically, so I can go over the liquidity trades and then a lot of the more little intricate things that I apply in the market. I mean, I have a lot of knowledge and I have a lot of education that I've learned from my own, like just from practice. So like for me, I have a lot of things that I apply, which I don't necessarily think I could teach to new traders or beginners. So we don't really have that right now, Henry, in the works. I think we're kind of leaning more towards like advanced traders where they're trying to master the scalping. Because, you guys have seen how I scalp every day. People kind of want to get on that same level where they can have the same mindset and use different confirmations, confluences, and theories to help with their. So here's another thing that I've been doing lately. So basically, if we have a strong bias in like one direction, and I'll just use this right here, right? So I'll use this right here as an example. So say, for example, right here, we have a strong bias for a sell. I know we don't, but if we did have a strong bias for a sell, I would turn on the K2SR. And I don't really discuss this with people too much because this is something that I just kind of know on my own. See if I can find one here. I mean, today was a kind of a crappy day to use it, but let me see if I could find. Okay, so maybe this one right here. So as you guys can see, there's a K2SR right here, right? And this can be used as a rejection point. So if I turn this off right here, and say, for example, you have a strong sell bias, which we've had a strong sell bias for US 30 for like the past couple of weeks. If you're looking for price to come back down, I would be looking for price to come and test this area. And then if I have a variation or a liquidity push or whatever, when price gets to that point, like for example, right here, right, price pushes up. This is kind of setting up for a V3. See how that V3 right there is set up? I would take that and I would write it down a profit. So that's me using another confluence there. Like I said, you guys can use any of these indicators to incorporate another confluence. And you can see the perfect rejection right off that point. Like you didn't even have to think about it. You're like, okay, I already had that point marked up. So when price came to that point and it gave me a V3, even though it's not like really a valid V3, you could have taken a speculative V3 there and still made a pretty good profit. So it's if you guys are just learning the basics of K2, you're barely touching the surface, guys. Like once you get really good at identifying things and using the indicators for other confirmations and confluences, you can catch a lot of different moves. That's kind of what Kevin's been doing. That's why he's been making like so many profits here, because he's using all the tools. Like he's not just using one strategy. That's why when people ask him like, hey, Kevin, what are you doing? He's like, I'm using the K2 indicators, or I'm using liquidity pushes, but he's also using other confirmations like what I just showed you right there. So there, the possibilities are endless. Once you actually get this stuff down, the possibilities really are pretty endless. So other than that, let me scroll down real quick and see if there's any other questions here that I'm missing. We just have one last question from, Natasha. Yeah, Natasha said that's what I need to learn the basics. Yeah, so this is the problem with like a lot of people who join K2. People will join K2 from other groups and they see a lot of people here profiting. Like for today, I haven't posted everyone's profits yet, but even though today was a holiday, there was still like, decent amount of people here who locked in profits today, like Maddie over here. I need to check the chat to see who else posted profits, like Maddie and Sisu. They traded even during the holiday and still made pretty good profits. The thing is, whenever people join K2, they see all these profits being made and they try to jump in and be a master at everything like on day one, right? Just like when Natasha said, she needs to learn the basics. That's really what it is, guys. It's learning the basics and then using that as a foundation to apply the other indicators. That's why I have these strategies here. Like these strategies are just, these are just a guideline. This is to show you, okay, if you apply the strategy, you should be able to do fine. But once you get good at this, you can start applying different indicators and different strategies in conjunction with each other to basically build a super strategy like what we have here, the triple confluence. I don't think I've taken this strategy. I don't think there's been a time where I've taken the strategy or other people in the group where it's ever lost, because it's such a good strategy, but it doesn't come up very often. This is something that was developed by me and like another member in the group. Like they were applying this and like, hey, Sean, this has been working for me. Let's check it out. And then I started applying and I was like, dang, this like never loses. So, there's always going to be new things being developed in K2. The more new members we get, the more creativity we get in the group, the more possibilities and opportunity that will come up, because everyone sees things differently. It's not always the same. But yeah, Natasha, I think that might be about it. Let me see if there's anything else. Yeah, Natasha said, even though I am new, I've gotten pretty good at taking snipes, but those don't come around often. The breakouts, I miss a lot. Yeah. And those are two totally opposite strategies. Like for the snipes, you can like literally wait for it and catch it as they come. For the breakouts, they happen too fast. So if you miss it, you miss it. If you don't, then you're good. But I agree with you, Natasha. Even myself, I missed a breakout too, and I created the strategy. So, just goes to show, like the more focused you are and the more knowledge you have regarding the strategies and the indicators, the better you'll be off. So I think that might be it, guys. Unless you guys have any other questions, feel free to put them in the chat. Otherwise, I think that might be it for this session. Hopefully this helped you guys out. And if you guys have any other questions, or if you guys didn't get your questions answered, don't worry, because we do have these mentoring sessions weekly, and we'll be having another one next week, typically on Mondays at 2 p.m. I know this week we had it an hour earlier because people asked to have it earlier, but we ran through until 3 o'clock. So we've been on this mentoring session for about 2 hours now. And these sessions will run until we run out of questions. So I think we're done with the questions for now. So if you guys have anything else to cover, if you want me to discuss anything, feel free to email me or message me on Telegram. Otherwise, I'll be back here tomorrow morning for the next live session as we officially kick off the trading week. Let me check the news real quick to see if there's anything coming up tomorrow. Tomorrow morning, we have news at 7 o'clock. It's existing home sales. It's a medium impact, but I don't think it's going to really affect it too much. And then we have Fed member Messer speaking at 9 o'clock. Other than that, we have Powell speaking on Wednesday. Unemployment claims on Thursday, flash PMI, inflation news, and then more Fed stuff on Friday. So, all right, guys, I think that's about it. If you guys have any questions, feel free to reach out. Otherwise, I'll be back here same time, same place for our live session, 6:30 a.m. on New York Stock Exchange Open. So, all right, guys.